This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to talk about MACD, and I want to talk about a very important signal that takes place that I think a lot of people overlook. So I want to go through a number of examples today and give you this, what I call hidden divergence or reverse divergence, and give you some examples of how this can come into play for entries. So let's go ahead and get going. I'm looking at TEAM right now, TEAM on a daily chart. I've got a daily here, and what I want to do here is just start on the left, and I'm going to work through a couple of signals that took place. But let's just first understand what this is telling us. So price makes a move up and then pulls back, and then we make a move, another move to the upside, and then pulls back. And if you notice, this is making a higher bottom from here to here. But look at what the MACD is doing. MACD made a low here, right around this level, right? That corresponded to this low, all right? And then on this pullback, which was a kind of a mild pullback in price, we get a very deep pullback that clearly makes a lower low in MACD, okay? Now, one of the things I suggest is if you can find this pattern sitting right on the zero line, then you have a very powerful situation on your hands and something we really want to be on the lookout for. And the reason is that that can be a little bit more of like an intermediate term move. When I see this pattern happening and it's kind of a little bit above the zero line, I still like it, don't get me wrong, but it's usually more of like a trading play. And but again, there's nothing wrong with looking at that, and it can come into play in a number of different circumstances when you're looking at the different ADX patterns. So it's just something to be on the lookout for. Now, we want to look at reverse divergence when a stock is going down as well. And we can see that this low here, we made this peak here compared to this peak, we made a higher high. And we also made a higher high in MACD. This is not reverse divergence, right? This is just this plain old zero line reversal where we rally up to the zero line and we get a reversal back to the downside. But if we were to compare this peak here with this peak on this side and look at this and this, you can see we made a higher high in MACD right at the zero line, okay, while this was trying to poke through the moving averages. Now, there's one thing that I do suggest. What I'm looking for in this signal, I either want to see a reversal at the 40 or I want to see a reversal at the 18 MA. Those are my two favorites. When you get reverse divergence, you want to look and see if we have it taking place at the moving average. So in this case, we definitely had that. In this case back here, because it was a little bit more of like a sweeping turn, it was kind of in between. It did touch the 40 before it turned up or came really close. So I consider that the same, very much the same pattern, but still very powerful in and of itself. Now, we actually had another one here. And you compare this peak to this peak, and you can see this made a higher high while this is making a lower high. Now, one of the things that I think is different from standard divergence, and standard divergence is when price makes a lower high, price makes a higher high while the MACD makes a lower high, right? That's your standard divergence when you're going up and you're looking for a divergence in MACD or slowing momentum signs. When that happens, we tend to want them to be closer together. We don't want to have a big distance between the two peaks that we're comparing. And we definitely like to have it be the consecutive peaks. And I feel the same way about the reverse divergence. However, I give it a little bit more leeway like this. You see how we actually had a little mini intermittent peak here? I will compare when I go and look at MACD, and if it looks like it's kind of pretty important levels, like pretty important zero line tests or something like that, I will go back a little bit more to compare those. Just like here to here, that's pretty far apart when I'm looking at a MACD divergence, but in a reverse divergence situation, I'm okay with doing that. Now, let me switch to the weekly chart. I want to give you actually two examples that took place here. One is on this move, we make a move up and we pull back, and MACD pulls back, okay? And then we rally up and we come back down. Now, these are pretty close together. I like that. And if you notice the MACD, so let's just zero in on MACD. MACD clearly makes a lower low. You see that? And if we look at price, it's actually making a higher bottom. So that's a really good signal. That it didn't quite make it all the way to the 40, but really close, and then turned right above the 18 for a very nice signal. Now we can go a little bit more and see that we pulled back here and made a low in the price pattern right at the breakout level, came back to the breakout level, found support at the 40, rallied up, made a higher low right at the 40 once again, while MACD was making a lower low and getting much closer to the zero line. But also look at how low the ADX was. So we had 3 lines in ADX all low, showing no strength to the sellers whatsoever. We get this reverse divergence. So you're looking to, what I usually do with reverse divergence is I don't wait for this to signal a crossover here as a buy. I mean, you can do that, but I like to go down to the smaller time frame and look for some kind of a signal to get me in. So keep an eye out for this pattern. You'd be surprised at how often it'll show up. And if we just look at what took place here, hold on a sec. If we can see that on a S&P chart, if we go back and look at the move before the last rally, we made a bottom here, and look at how much this moved down. You see how this pulled back and made a significantly lower low, while this was making a higher low. You can compare it against any of these lows, and this was clearly making a higher low right at the 18, while this was making a lower low. And then we got another leg to the upside. Now, if it happens early in the trend, you can play it for a bigger move. When it happens later in the trend, you just want to trade a trading play. And we actually had one early in the trend here. You see how this was a higher high and this made a little lower high, and those were close together. So as this is holding the 18 right there, I mean, that's a really good signal. You almost didn't even need to go down to a smaller time frame, and that was kind of the liftoff move. We actually had another one here. This made a slightly lower low while this was making a higher low at the 18. So you just kind of want to keep an eye out for that. Okay, so these are very good signals. In fact, if we go to the hourly currently, we're doing it right now. Now, based on how this is played out and how far it's run, yeah, see, that's a higher low. This is a lower low, right? Now, based on how far this has gone, I would consider this just a trading play. Not necessarily the beginning of any kind of trend. But the other thing I would suggest to be on the lookout for is when we get this reverse divergence at the zero line as an opposing trend trigger. Now, I don't have an example of that right now, but this just made me think of it. This was convergence because this made a lower low. This was an ABC decline, while MACD came down and made a lower low as well. But there will be times when MACD will come down to the zero line, bounce off, make a higher low, while this is making a lower low. It's a very good opposing trend trigger type of a pattern to be on the lookout for. So kind of like what's going on here, but these lines didn't actually crisscross. And we did get pretty close to the zero line with low ADX. So again, sort of a trading play, but I just wanted to give you a number of different examples. As you start to look for this, it'll start to jump off the screen for you more and more. Just be on the lookout for it. Write it down and put it on your monitor so that you're thinking of it all the time. In fact, the different patterns, pinch plays, standard divergence, reverse divergence, and zero line reversals. Keep those on a monitor so that if a stock is doing something and you're looking at it multiple time frames, say, is this time frame doing this? Is this time frame doing one of these? Is it this time frame doing one of these? And you won't miss these if you're constantly thinking about it. It's in the forefront of your mind. All right. Go ahead and post any questions or comments, and we'll see you next time.